For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started.
Good day, traders. Mindset Reset. It's Tuesday, day 2 on the front side of an FOMC week. Now, being an FOMC week, I mentioned earlier about focusing on round kick, easy money trading setups. Today, we'll answer some questions. We'll also talk about specific opportunities that have already played out, but also the mindset around an FOMC week, and then focusing on the opportunities on the backside of the week. And always the behavior and mindset of the trader. The number one reason most retail traders will be inconsistent, will never be consistently profitable or even get to size, is because of recurring bad behavior, self-sabotaging issues, lack of an edge, and repeating the same old retail trading cycle. Now today, we had some excellent opportunities in Asia. We had some excellent opportunities in the London session. And often on the front side of a week, we can see that, where we see range expansions on day 2, reversals sometimes if day 1 has been a runner, a running market that is either closed out of balance. We saw that on a couple of the yen cross pairs. We also saw that on the metals. But we saw moves on oil. We saw a end of third hour reversal on natural gas, low of the week, a market that had closed in breakout on Friday, closed in breakout again Monday, the low of a new week. And often on the front side, day 1, day 2, we can see fantastic opportunities in those sessions as the market starts to expand the range. And we're in week 3 in a new month, December, obviously Christmas just around the corner. And with an FOMC week, one of the things that I talked about this previously, question that I get asked frequently is, do you trade in December? My response always is, I only ever trade when I find a playbook best trade setup. Now, last year, if you go back, there were several textbook opportunities throughout the month of December. In fact, during the holiday week between Christmas and New Year's on the trading days, and then into the first part of the new year, there were absolutely perfect opportunities. And my own rationale behind that is that because there's probably perhaps not as many participants, maybe a bit lower volume, things are executed almost without fail, timings, levels, behavior of price, and on the days especially where there's no major red news. Now, one of the things traders can decide for themselves is whether or not they trade, they want to trade during those times. And now, for the most part, I treat, unless I'm away or I'm on a holiday, I don't trade any of the days that I know are holidays. But I also am cognizant of the fact that often, larger players, there's algorithms running, hedge funds, banks, central banks, etc. There's still going to be a modus operandi in terms of moving the market. Will I reduce size? Possibly. Will I avoid certain days? Possibly. But for the most part, outside of that week between Christmas and New Year's, I just sort of go about my business as normal. Again, I may be away for a day, or I might be away for a few days. If I was away for the week, I still may look at certain days. Again, front side, back side. And I'm just looking for templates. So I don't get too flustered about trying to trade. Again, I treat it the same as any other week. If there's a template setting up, Christmas, I believe, is on a Wednesday this week. And so obviously, that can affect front side, back side. I'm not really too worried about it during Christmas week. I don't really pay attention at all, to be honest. And that's up to traders to decide as to whether or not they're going to trade. Go back yourselves and do a little bit of back testing, maybe, the last 3 or 4 years to see what types of opportunities there were. But I'm looking for the templates. Now, we saw a beautiful first red day on Monday on oil, an inside day. And that played out. It started to play out in London. And then, of course, the low-hanging fruit, which for some traders, one of the comments was that they didn't like it. Was difficult to sort of trade. And again, if there's opportunities that fit the larger time frame template thesis, and it's a market that's perhaps already collapsing or low-hanging fruit, one of the first things I always suggest is just to reduce size. And for traders that are learning, reducing size right down to the smallest parcel size and focusing just on execution and building your confidence by executing the trade, placing your stop loss and a target. And like I learned from Brent Penfold years ago, Brent Penfold would put an entry into the market with its stop and its profit target and walk away and accept that either one of those was going to get hit. He didn't think about it. He didn't worry about it. That was his trade methodology. I'm either getting stopped out or it's hitting the profit target. Now, personally, I like to be in a coil, a market that's coiled sideways before it explodes, either in the long or the short direction. Once that explosion clears a level, I'm happy to walk away once I've moved my stop into some degree of profit. I don't usually go to break even in case there's any slippage or spiking. I want to make sure, even if there is, I get stopped out with a small profit on the last portion of that trade size. Again, that's my own personal approach. How traders manage those trades themselves is up to them. Now, the next part of this is FOMC week. It's day 2 on the front side, and I talked about this last week in a video about signal days on Wednesday. Now, obviously, FOMC, if you go back and do your homework on FOMC, typically, probably more than not, 70% of the time, we see large volatile movements from one extreme to the other, whether it's low of week to high of week, low of day to high of day. But we see often backside opportunities. And one of the challenges I mentioned in the video on the weekend was often traders, they get chopped up a little bit or they take some small losses before they even get to the midpoint range of the week. And often that's the escalator. Even if there's session nail and bails, we see front side in a lot of cases on certain instruments being the front side in certain templates. So a first red day template, if it's a signal day on a Wednesday, first green day template. 3 days of breakout traders in the market can take us into a Thursday trade setup. And in a week where there's FOMC, we might see something play out on Thursday, Friday. So the willingness to sit on your hands knowing that there's an ACB opportunity. We saw some ACB opportunities today on Canadian and Swiss pairs and cross rates, where we saw markets, Canadian major red news, but we saw some disparity develop and Canadian Swiss, a collapse right into, well, I'm assuming at this stage it's going to go into the close. But always is about my mindset is this. I'm only looking for setups. I'm not worried about trying to trade a market. And the reason why I repeat that, and I can show you the setups. They're the same setups. I put those the signal day setups. Every single week I have just the basic model. And then of course, if you find instruments that give a signal day, the inside day, or it's a high of month, low of month opportunity, that you crystallize the understanding of where it's easy to make money, and then building your muscle memory on templates and how price should behave. And then when you don't see that, understanding that that's the science project, if you get involved, that can undo the good results that you get on the perfectly set up, well-engineered, easy money templates. And that's where the behavior of the trader comes in, because the mindset of the retail trader often is that they want to get better at trading the markets and they want to take trades so they can make more money. And often they get 50-50 results. They make some money on some easy money days where any trend following model or any basic model probably would have made you money anyways. And then they lose it on science project days, either on the same instrument, trying to trade the same instrument every day, or trying to trade another market because it moves. And you know, I talked about how it took a long time, even when I knew things that I was doing wrong and repeating them. It's like, you know, I use the analogy sometimes of an alcoholic, or I'm not a gambler. I've been to 2 casinos in my life and I've never placed a bet. I'm just not really into that. But for people that have addictions or have compulsions, and you know, I've always been a firm believer that once you can defeat anything that you want once you make the decision to do that. But it's an ongoing daily battle of getting 1% better every single day. Not necessarily to change, but to replace things in your routine, your process, your mindset, your self-talk, your behaviors, your environment, your relationships, the way that you speak, the way that you act, the way that you perceive the information that the market's providing for you, because everything is shaped by your beliefs and what you think you know about the market. And so movement is designed to get you in. That's what the movement is about. The fugazi, the impulsive movement, the explosive movements in other sessions, the breakouts of ranges, the movement itself into the timing window. The volatility is designed to get retail traders to perceive things and then get in, whether they're right or wrong. Not even to sit on their hands and wait, or even wait for the right day and the right setups where it's really easy to make money on. So these are things that you have to learn over time. And there are certain days when you just look at the markets and you go, I'm not touching that. And we see that sometimes on front sides of weeks, non-farm payrolls, FOMC, CPI. And then we see easy money afterwards. And sometimes there are easy money setups on cross rate pairs that may not be as impacted as with as much volatility as some of the US dollar based instruments. These are all things that I've learned the hard way over time. And when I pass this information on, sometimes traders will come back. I've had people come back and say, a few years ago, I thought you were, full of it. And now I come back and realize everything you've said is true. And there's nothing on here that I'm sharing with you that is any fluff, that is, vague or esoteric. I discussed this last week with a trader. If you think there's something vague or esoteric about, some people think I'm keeping secrets. There's no secret, but your daily process and your daily routine is the secret. And unless you stick to that and you stick to focusing on setups that you've mastered or built your muscle memory on, then every time you look at different instruments trying to figure them out, then that's when you should be checking and asking yourself, am I trying to figure this market out, or is there actually a setup there? Because setups are easy to make money on. The challenge is obviously finding the best instrument and the best setup on the day, or just sitting on your hands and waiting for templates to set up so that they're easier to identify. First red day, first green day, 3 days of breakout traders, day zero templates, or signal days. You're looking for the inside day. Everything is in the playlist and in depth. And so the best part of that is when you start to see what an easy money making setup looks like, how it behaves, how fast you make money, you realize when you're looking at other instruments on certain days that they're garbage charts, they're 50-50, and I don't care how good of an instrument it is for trading, that certain days are designed just to go nowhere, get people into the market, and hold them there in very little profit or loss, and then go into the consolidation, and we see an explosive move the next day in the Asian or London window, which all that volume now becomes order flow or trapped perhaps on the right side or the wrong side, but you're held into that market as opposed to entering into a market as it's coiling and preparing for an explosive move, which is what I refer to as scalable, because when that coil builds and it's preparing for an explosion, putting size in to a 90-10 opportunity that's going to explode and taking profits and letting some of that continue to run on an ACB template. There's zero stress, zero thinking, zero emotion, and zero management. Rinsing and repeating those types of trade setups is how you can significantly compound your trading account very, very quickly. Not high risk, not high stress, no more risk than somebody taking a 50-50 trade, except we're entering into setups that are coiled either for reversal or trend trade opportunities. So emphasizing that on an FOMC week, just be content to look for simple rinse and repeat round kick setups. And then also understanding that on the backside, Thursday, Friday, we could have both days could offer us great opportunities. They may not. We're heading into Christmas and we don't want to chase anything. We don't need to do anything different other than stick to playbook best trade setups. And if there's nothing that comes along and we go into a Christmas break and we come back into the new year with no damage to our trading account, no psychological damage, sharper, better, by having the actionable review process, and then even working on instrument identification. A great question was today, I've had 4 or 5 pump and dumps the last few days. How do you narrow it down to 1 or 2? And here's the simplest way I do it. Often I'll have it down to a couple of instruments, and I'll just look at the charts to see which one I feel is the best engineered template on the day, and I just pick one. And often I don't really care whether there was a better one. Sometimes it's just one of those things. You accept what you decide to trade. But the most important part is that you've got the right template, and number 2, that you execute as flawlessly as possible. So if you're on an easy money making template and there was another one that moved more, okay, figure out on your spare time how you're going to identify that one as the best candidate next time. But there's nothing to get beat up about. You made money, you executed flawlessly, you locked in the money, and you walked away. Rinse and repeat. That's all that this is about. It's about building your trading business on simple, easy money making trading setups. If there's ways for you to improve or add other opportunities into your business that are 90-10, absolutely. And I've mentioned this before. I spend the majority of my spare time working on system development, looking for opportunities where I can maximize trade setup opportunities, whether that's with increased size or reducing instrument selection, or which sessions happen the most frequent, where are the most best scalable opportunities, how can I improve and grow my trading business even faster. That's all I'm looking for. If I don't find it, I don't worry about it. Stick to rinse and repeat. As I've mentioned, 1 or 2 high probability 90-10 setups a week are enough to compound your account. Trying to trade every day, if there's not a best trade candidate, or even executing, managing size, understanding where your real advantages are, nailing bales, reducing size on 5-star loadables, wiring in the funds and loading the boat if it's a 99-1 setup, which I will do, because those are the days that are year money. We've talked about month money, week money, and then there's year money. So those are the days that I think we get at least once a month, if not maybe a couple times, but once a month for sure. And sometimes they don't happen in the US window. It might happen in London. We maybe get the low-hanging fruit in the US. I don't really care. I don't get caught up into, I should have been up for that. I should have been up for this. I joked with Steven today. There's a couple setups in London, usually every beginning, Monday, Tuesday, at the beginning of a week. And I'm kind of considering occasionally getting up for those, and they're one and done for the whole week because they're scalable, driven by higher time frames. And day 2 typically expands the range. So we got Christmas coming up. It's FOMC tomorrow. Manage yourself. Stick to the plan. Rinse and repeat. This is not going to stop. It hasn't stopped. It will never stop. That's the nature of the game. In order to shift the money from the many to the few, keep it simple. Rinse and repeat. Make trading a pursuit of pleasure so you can enjoy your day. You can get paid, and you don't have to be at the screen all day. And there's very little stress, very little emotion, very little thinking, and most often very little trade management. Keep it simple. This year coming is going to be your best year yet. Have a great day, traders. Love you and appreciate you. Mindset Reset. We'll have a technical video coming out either later today or tomorrow. Heading into the backside of the week, we will get some textbook, playbook, best trade candidates to significantly compound your account. Have a great day, and may the markets go with you.